You've probably heard about the Analyst Academy from Fundamental Edge by now. So instead of repeating the basics, let's talk a minute about what the Academy is and is not. The Analyst Academy is a practical course on the tools and skill sets required to succeed in the buy-side analyst seat. The instructors have experience from firms such as Maverick Capital, D. Shaw, and Citadel. But what is the Academy not? It is not a course on stock picking. It is a rigorous guide to learning and process. It is not a guide to pod shop investing. The Academy attracts a wide range of equity investors, from multi-managers to long-only to family offices. Rather than teaching a particular style, Fundamental Edge equips learners with the essential skills required to hit the ground running and support their PM. It is not a financial modeling course. Modeling is, of course, part of the curriculum and plays a central role, but the Academy is more than that. It teaches idea generation, thesis communication, and how to add value as an analyst. To learn more and access a 10% discount code, go to fundamentaledge.com/YAVP, or just see the link in the show notes. All right. Hello, and welcome to the Yet Another Value podcast. I'm your host, Andrew Walker. If you like this podcast, we mean a lot if you could rate, subscribe, review wherever you're watching or listening to it. I think we're almost at 10,000 subs on YouTube, which most of the people listen to over audio. I don't know why. I've got a very handsome face, I like to think, but 10,000 is a nice number. So anyway, rate, subscribe, review. With me today, I'm happy to have on for his monthly State of the Markets, my friend and the founder of Range of Capital, Chris DeMuth. Chris, how's it going?
It's going well, Andrew. Thank you for having me.
Great. Lots to talk about today. Before we get there, just a quick disclaimer to remind everyone, nothing on this podcast is investing advice. That's always true, but Chris and I, it's the state of the markets. We could talk about anything. I think we have an idea what our main thing's going to be, but because remember, we're talking about anything, we could be talking out of our butts or armpits or something. So please consult a financial advisor. None of this is financial advice, all that. Chris, it has been not even quietly, a pretty rocky month in the markets. You and I are talking, it is April 25th. My preferred index, the Russell 2000 is down 7% this month. The S&P 500 is down 4 or 5%. If you kind of did it on the past 30 days instead of month to date, both of them would be down a little further. So it's been a little rough out there, I'd say. S&P's still solidly up on the year. Russell's negative on the year, but I guess I really want to focus on one particular event, which but I guess just quickly, how are you thinking of the markets kind of as we round out April and head into the summer months?
Well, I don't have any big directional bet, but if I see something that looks mispriced, bottoms up, I'm also not worried about it kind of running away from me and looking stupid if we have a CVR we really like, or we have something that's very specific to energy or crypto, or something that's kind of a kind of off the run, one-off bargain, which is what I'm happy thinking about anyways, is probably going to do well here on absolute and comparative terms. And, it drives me crazy if the market's kind of always going straight up, especially growth, especially mega cap, so that if my teenagers heard of 5 stocks in the world, they're all doing better than I am. And he kind of wonders how this investing thing's so hard. So a little bit of humility from that corner of the world is fine with me.
It is. So, like the NVIDIA and stuff, but one of the most frustrating things I think for everyone who is an investing in growth over the past 10 years is hey, everyone had heard of Google, Facebook, Apple, Amazon. If you just heard of them and great companies, buy over the past 10 years, you created the most legendary returns of all time. I think you'd be plus 25 or 30% annualized if you had just bought those 4 and held them over the past 10 years. And it's a little frustrating. Markets aren't supposed to work where you just say, oh, big, good company, buy, and drool out your mouth. And I hate to say drool. I don't hate to say it, but I know a lot of people have better theses than that, but it's hey, it's not supposed to be so easy. You just find the biggest. And I do wonder if I'm not the first to say this, but Apple today, largest company in the world. This is different than General Motors 70 years ago, largest company in the world. General Motors, if they wanted to build one more car, they need to get a lot of steel. If they wanted to build 100 more cars, hire a lot of employees, build a whole new plant. Whereas Apple, it's hey, one more phone, one more Andrew late at night, baby won't baby won't sleep. Andrew wants to buy something on an app, like cost them nothing. We've never seen businesses before like this. So,
the largest companies in the index for a century were self-defeating and kind of rolled over on a fairly regular basis. And now all of the biggest models are also in some ways the best models and are in some ways all platforms with pretty much no marginal cost of an incremental customer. And it's not just that my teenage son has heard of them. It's that they have done so well, and investors have done so well on kind of first level thinking, kind of on something that seems obvious to me. And if I've always been kind of a nerd during my homework, looking at the cool kids thinking, well, it can't possibly be the case that something kind of obvious isn't already priced in, looking for something that's superficially beautiful, that's actually beneath the surface toxic, or superficially ugly, that's beneath the surface of very valuable. It's been a good time to kind of just glance at the surface, come up with the most obvious reaction and say, well, that's good, kind of above the fold, good news in a good business model that can grow forever has been a really good investment for many years now.
Yeah, the one thing is we haven't seen any of these break so far, and maybe we won't, but the interest, like a General Motors, when they break because Toyota makes better cars, but because it's such an asset heavy company, like, yeah, they can break into bankruptcy. But I do think it is interesting if an Apple breaks or a Google breaks or something, like a better search engine. When that happens, Google, I mean, the bottom for anything is zero. But I think people will be surprised, like, oh, I'm buying Google at 15 times earnings. I've got this margin of safety because the multiple is kind of low. Like, I think they'll be surprised how fast the E and that earnings evaporates if and when one of these ever loses. Because again, there's not these hard assets that kind of protect you there, give you that downside margin of safety. When these go away, like, you think about Yahoo losing to Google in the early 2000s to mid 2000s, like the earnings just vanish. It's gone. Yeah. It's done. You think about BlackBerry ceding all their market share to Apple. Like, that's a $60 billion company that goes to zero in 2 or 3 years. Like, the earnings can go away really fast. But again, I don't know. That's not where I want to take the podcast, but I always think about those things.
Let me just, one other quickie thought, and then we can move on. Actually, I think I might even be able to slide in a transition here. So one quickie thought is that 2022 really improved a lot of these businesses. I'd say Facebook and the group maybe especially, but I think starting to look at Twitter in particular, maybe, but the other ones looked around and saw just how much bloat they had and how much distraction they had, and having kind of one bad year at the end of the kind of VC super cycle, at the beginning of rate increases and so forth, spooking them into becoming really serious as managers for the first time, then made these companies so much more profitable coming out of it, when they maybe oversteered, overreacted, but cut costs, and then coming out of that, just were better businesses, less distracted businesses. But to transition to antitrust slightly, I'll see if I can pull this off. If there's any one thing that Lena Khan and I agree on, it's that the law as written and intended doesn't necessarily fit today's topics. My reaction is humility and saying, therefore, let the market decide a lot of things that historically was written in statute that might not apply today. Her view is, let Lena Khan decide. This is an excuse to smuggle in command and control on all sorts of things where government picks business models through the FTC via antitrust law. So we have polar opposite reactions, but I would defer to her on the thoughts that she had that really brought her into office at an extremely young age, which is that what we've had historically doesn't apply cleanly to what is going on in the markets today.
Yeah, no, look, I completely agree with you there. Like, historically, antitrust has been, is there harm to the consumer? If yes, stop. If no, go, right? And today, it's really hard to say, Facebook, harm to the consumer, when you and I log on to, I mean, actually, neither of us, I think, go onto Facebook, but people log onto Facebook willingly every day. They've got this huge network effect, but there's a lot of different selling your data, like all that. But that is a great.
And the biggest one that does affect my life is that I don't write shopping lists. If I get low on toothpaste, I on my phone out of the corner of my eye get for $2. It says it's going to come the next day, but often where I live, it actually comes the same day. It comes by the next time I need to brush my teeth for $2 toothpaste. And when she was attacking Amazon, I said, hey, Lena, do you want to, if I pay you $2, will you drop it off at my front door by the next time I need to brush my teeth? Because that's magic. And so as a customer, like, what aspect of this am I being hurt on? Not only is the price unbelievably competitive, not only is the service amazing, almost beyond comprehension from 20, 30 years ago, but it totally changes my life because I don't even have to think about this anymore. I mean, it's just a momentary thing. And so like, the idea that I'm the victim is just preposterous.
It's really funny when you read some of these suits, either explicitly or implicitly, they'll call that out and they'll be like, Amazon will send you toothpaste, to your door for $2, and they're going to charge the toothpaste maker 80 cents for the privilege of being the toothpaste that's selected and gets sent to your door. And no one else can match that. The local mom and pop, you'd have to drive there. So you'd have to spend your time, and they'd sell it to you for $3, and they're so disadvantaged. And you'd be like, I don't see the problem here. Like, I save $1 and I don't have to drive to the store. That's incredible. Like, what is the issue? Yes, the local mom and pop cannot do that. Like that. Unfortunately, I know it sucks for them, but it's a really good thing for me. I fail to see the antitrust problem here.
And it just changes your life. I mean, when I was little, if I was working on a project for my dad, you might spend a significant part of your Saturday because you missed one piece and you'd have to go to Sears to get that one piece. And that's just no part of your life now. You're either doing something that's lucrative or something that's fun 24 hours a day. And you just pick whether you want to do a fun or lucrative activity, but you spend no time on boring logistics. And that's just a sea change. And that's a good thing. That's not a bad thing.
Another one that always gets me is, people coming with gig workers. And I understand there's other things, but I do always get a little bit where they're like, oh, the gig workers pay is too low. And I'm always like, well, yeah, I wish everybody had higher pay, but gig workers, it's not like anybody's like forcing them to take these jobs, right? They're choosing to because for their skill sets, for the flexibility, whatever it is, like they're choosing to do these jobs. And, a lot of them it's because they don't have to, like minimum wage jobs, when you set the minimum wage at $20 per hour, the demand for labor goes down a little bit, right? So people are kind of getting left out. I don't know. It's another thing. Neither here nor there. Wanted to talk about this lawsuit. I mean, it's literally hot off the presses. It got filed about 48 hours ago. So you and I haven't had a ton of time to talk about it. But I think the thing that is kind of making its way the most through antitrust, our world right now, rightly so, because, it's a big antitrust case that came down, is the Capri-Tapestry merger. The FTC, speaking of Lena Khan, filed to block it this week. Obviously, this had been rumored for a few weeks, but the official block came in this week. Tapestry and Capri quickly responded and said, "Hey, we'll see you in the court." I think that it's interesting how quickly they responded, and we'll see if that happens. But I wanted to get both you and I have read the suit, but haven't really had a chance to catch up on it. So wanted to get your thoughts on the Capri-Tapestry antitrust.
I want to look at the antitrust issues surrounding whoever controls the ink provider for the FTC, because there was a lot of black pages in here. There's a lot that we don't know. So on the topic of humility and antitrust, I want to be a little careful that there's so much that the FTC intends here that we don't yet know from having read what's public. That being said, we know that the vote was 5-0. We now have a full antitrust agency, and that includes the Republicans. So that is a change from when we had a short-staffed commission. And we know that we've already had a judge change, but both of the judges were Democrats. The current one's a progressive.
Let me just pause you on the commissioner point, right?
Sure.
5-0. So when I first heard this suit coming out, and again, I think you and I and a lot of people share the same thought, right? Capri-Tapestry, this is Michael Kors, Kate Spade, fashionable handbags, right? We were kind of shocked that somebody would think, somebody's ability to buy a $100 to $300 handbag, these guys merge and they're going to have market power over, higher end, but not the highest end handbags. I think we were surprised by that. We thought it was kind of a joke. I was a little, when I saw this and saw it was 5-0, I was a little surprised by that because I kind of thought this would be along party lines, right? Democrats would say, hey, big is bad. Let's stop this. And Republicans would say, hey, let the free market decide. But there are, and correct me if I'm wrong on any of this, or if you have a different take, I'll just run it through. I believe there's 2 Republican commissioners on the board right now, and both of them voted for this deal. And, it kind of struck me that, hey, the same day that this came out, there was the FTC put out something against non-competes, and that was 3-2. So the 2 Republicans voted against that. And, I was very surprised by that. 2 Republicans voting for this. I was wondering if there's anything to read into a 5-0 decision here.
I imagine that the answer is in the black covered up font. I've been a little careful. I kind of know indirectly the new commissioners, and I mean, they're not judges. This isn't a legal process. I have a First Amendment right. I can be as mouthy as I feel like, but it's an official process. I've been semi-deferential on my views publicly and privately, in part because I just don't want to say something stupid, and there might be very hot docs. Now, the thing that I can't avoid feeling is that there could be some prosecutorial discretion. I think a normal person would look at this and say, who cares? Right? It's a crime to go steal silverware, and you expect the police to throw somebody in jail. And it's a crime to steal plasticware. But if somebody took a plastic fork from work and then got kind of tackled by a police officer and thrown in shackles on the street, that'd be a little odd. If you took a piece of plasticware from a very wealthy person, that would be odd. And here we're talking about expensive purses bought by people who like not just the expensive purses, but they like the expensiveness of the purses, possibly getting slightly more expensive. Now, I categorically do not think this would happen, but if I did think it would happen, I don't think it's one of the top 100,000 priorities. Like, it's like, you think we could solve all the other problems first? The concerns I had with being able to sleep at night worrying about expensive locks pales in comparison to how silly this seems. But I'm being a little, so that is certainly my reaction. I'll go slightly more into that in a sec, but just referring to those 2 commissioners, they must see something that has not been publicly put out in either the press release or the non-redacted parts, because I know enough of their seriousness that would not be compelling to them.
When you read a lot of the redaction, when you read this is, the Tapestry SVP head of handbags said blank, 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 right? So there definitely are quotes. So you have to imagine there are hot docs. You have to imagine, I think they have hot docs. I guess my question to you on hot docs would be, how much do hot docs matter here, right? If you and I, if we ran a handbag company, and we bought another handbag company, and we're like, we're going to be the best handbag company in the world. We're going to slaughter our competitors. Our profit margins are going to be huge. Like, that sounds great, but that's also like a little bit in the scheme of it. Handbags seems like a pretty easy area to enter, consumer discretionary. I could go on Instagram and buy 100 different handbags. I guess, how much will it come down to? You go to the judges and you say, hey, yeah, the SVP said that, but A, that's not the stance of the company, right? Like, it's not the CEO who said that. And B, that doesn't preclude, like, this is a very competitive area. How much can hot docs get rebutted?
So this is a market, if you think about the most traditional model, the very idea for what antitrust was built over, the 2 railroads going to the same spot that would take 5 years for a customer to replicate. It's going to be one of the 2. Combining them and raising prices would hurt the consumer. This is almost the opposite fact pattern. So you can go online and find literally hundreds of different suppliers at this price point. Secondly, it is I mean, a frivolous enough topic, you could also just like keep the purse or use one of the dozens of purses you already have. Fashion right now, there's a much more of like a high-low emphasis where you could see somebody like Princess Catherine in England who will combine a $10,000 Hermes item with a $20 H&M item. So no one customer is ghettoized in any one part of the market. People go way up and way down and use all sorts of different things. So if you and I were, forget about the antitrust case for a second, if we were going to invest in something and we're saying, where is current market share least relevant to where we would think it fundamentally is as a business 3 or 5 years from now. And I said, I have a 12% market share. That doesn't mean anything. In fact, it could be self-defeating because the ubiquity of some item becomes boring to the fashion kind of conscious buyer that tends to want boutiques that I've never heard of anyways. And so these companies are petrified by competition. They're not lacking in competition. And who knows? I simply know that I don't know where the competition is going to come 2 years from now. It's just the FTC staffers think that they know everything, and that this market share is like it's like talking about gravity or some force of nature that once you have it, you won't let go. So in fact, I don't own a position. I'm looking at the stock price right now. It's basically at the $35 that it came from right before the deal. But one of the reasons I'm not that excited about this is in whatever case, whatever situation, if they don't win, like this is not a company with pricing power. They're going to be in that worst quadrant of accused of antitrust violations and pricing power, but not actually having it. You want to have it and not be accused of it. But this is just an industry that just three things really quick that they focused on that caught my attention. One, they clearly focused on physical locations, which is a head scratcher to me on how that harms customers and how online isn't a focus. How I had something I saw in a storefront that was specific to a storefront in Seoul, and I sent a quick email to the store in Beverly Hills, and they were willing to send it to Connecticut. So this whole I need a physical presence locally. It has nothing to do with for a present for my wife. I can't think of how, as an actual real life customer, the physical location. I didn't check to see if there was a nearby store before I made that purchase. But the physical location they seem to think is important. That's a curiosity. Secondly, they're clearly trying to conform to the new guidelines. It's possible there was some horse trading between the Democrat majority and the Republican minority saying, hey, we need you on this to basically redefine where antitrust is in the new guidelines, which are much broader for the government to enforce. And then the thing that I'm really going to look to see why it was so convincing is smuggling in work and employment, not just price/salary, but minutia of the terms, the workplace compensation and so forth. They want to be able to control that from the FTC.
I could not believe so in Albertsons Kroger. That had a highly unionized grocery labor force, right? And so they mentioned one of the things in that case they mentioned was, hey, these two merge. They're often the only unionized grocery labor force in these towns. So they merge, and all of a sudden you have monopoly power on the labor side. I think that's a real stretch. We've never, to my knowledge, we've never seen antitrust for labor tested in a case. But here saying, hey, you have these two people merged, they're going to have 33,000 combined employees, and it's going to be a disaster. They're going to have monopoly power over retail employees. I mean, it struck me as bizarre. Our friend Lionel Hutz had a piece yesterday where he said, hey, a lot of what the FTC is capturing with their responding to wage increases is not them competing with each other. It's actually local minimum wages going up. But even if it was, it strikes me as bizarre, to think that again, everyone has skills, but they're talking about hourly employees in the handbag market. Like, to think that they couldn't walk across the mall, literally the mall, and go find 20 other jobs if the, Kate Spade and Michael Kors merged or something, like it's insane to me. And to think that that's going to have a monopoly power, I couldn't even believe they tried to bring it in. And I feel like that part, it's going to get laughed out of court. I don't know. What did you think there?
A couple thoughts. One is, I remember thinking it was very funny when you were applying to college that the kind of most elite schools claim that they're the best. And as you kind of go down and down market, they still claim that they're the best, but they just have increasingly specific geographical, it's kind of, you'd have the some things like, oh, this is the Harvard of the South, or this is the, kind of increasingly specific geographical terms of where they're dominant. Similarly, in antitrust, you can always have a monopoly if you have a specific enough market, but it shows how far away they're getting from caring about the consumer, where the consumer probably doesn't even know if you poll people, are you going to a union or non-union grocery store? Nobody knows, nobody cares. It has nothing to do with the consumer. It's just trying to bully companies into having the government pick their kind of favored way of compensating employees. Now, it's even more egregious in this case, where they've kind of dropped the union aspect, where you're trying to define this incredibly specific market. From a employment perspective, though, there's absolutely nothing that ties an employee to only being able to market at that level and not being able to market at, the high level, $10,000 Hermes bag, or the lower level $100 kind of mall, strip mall bag or discounter bag. So these people can go do other things. It's not like, oh, I only am able to sell $200 to $250 kind of purses. So there's nothing that holds them. It's just really arbitrary.
Brett Coffrin, founder and lead trainer of Fundamental Edge, barely remembers his first year as a hedge fund analyst. Most of that year was spent in a blind panic. Was his research any good? Was he learning fast enough? What did his PM really want from him? Training on the buy side was non-existent 15 years ago when Brett was a new analyst at Maverick. Then he actually got demoted. Then he worked harder, found mentors, and asked for uncomfortable feedback. Eventually, he turned it around, learning by osmosis from the talented people around him, and rose to managing director. But is this the best way to develop talent? Brett doesn't think so, and that's why he founded Fundamental Edge. The Fundamental Edge Analyst Academy provides students with the tools, frameworks, and confidence to excel in any fundamental equity analyst seat in the industry. Lose the panic and fast-track your career on the buy side. Find out more info about their next cohort at fundamentedge.com/YAFP, or just see a link in the show notes. Chris, the last thing I wanted to talk about here on Capri, actually, there were three more things. Number one, let's start with the silliest. A Real Housewife. So twice in the FTC complaint, they mentioned this entrepreneur who had a failed handbag startup. And it struck me as funny because they just come out and they mention her. And I was like, should I know who this is? Like, what's going on? So I Googled it, and it turns out this failed handbag entrepreneur they mentioned is now a Real Housewife, which I thought was hilarious. And her failed handbag startup they mentioned, she sells it after a long time, but they sell it for $13 to $19 million. So let's just call it 15 million ballpark. And yeah, $15 million exit isn't the wildest success story of all time, but I take a $15 million exit. That's not exactly the sobbest of stories to go start something up and sell it for $15 million. Now, I'm sure a lot of capital went into it. I don't know what other things, but it just, it struck me as a little crazy, like to cite failed entrepreneurship as the reason, like one case of failed entrepreneurship as the reason this is going to be antitrust. And B, I thought it was kind of funny. Lena Khan is roughly 35. She's right in that demographic. And I thought it was kind of funny that she comes out and she's like, failed housewife entrepreneurship. Like, this is the issue with this merger. It was just very humorous to me. I understand this doesn't make or break the case, but you read Albertsons, Kroger's, there's cases of Chris DeMuth, he worries that if Albertsons buys Kroger, his local grocery store, which is the only pharmacy within 15 minutes, is going to get closed, and he'll have to drive 45 minutes to get his life-saving medicine. Or, they've got a mom who says, hey, I go and get my kids peanut butter, and if this closes, the only place to buy groceries will be a dollar store, which dollar stores are not great for buying all of your house. But, that's Albertsons Kroger. Here it's a Real Housewives tried to do a startup, and she exited for 8 figures after a few years. Like, it's just crazy to me. That's the antitrust. I'll pause there and let you say anything you want to.
And we also have to prove that the customers liked her bags. Maybe that she had got 8 figures instead of 9 or 10 because they didn't like her bags as much as they liked somebody else's. I mean, you need a
Andrew Walker, host of the nichiest of niche finance podcast, did a handbag startup and it failed and he couldn't sell it for $1. Block this merge. I don't think Capri-Tapestry is the reason that my handbag startup failed. I think there's 100 reasons I'd list before that.
I mean, in 24 hours, you can get financing online, you can get marketing online, you can help with SEO and social, and you need a scrap of material and something that customers want. But a lot of this is coping with the fact that the customers wanted something else. I think it's probably the least good sob story. I mean, you could put a sob story together and demagogue Spirit, which they did. You could demagogue a Kroger. But you really want some kind of down market angle. If you're down market, you can also just put your stuff in your grocery bag. I mean, this isn't a necessity, which again, that is not carved out of the antitrust law, but that could come into play in terms of just reasonable prosecutorial discretion. Life short, what are we going to focus on? Is this honestly I only wish this was our biggest problem we had to deal with.
It's another, as you said, like antitrust is real and you could imagine a lot of things that are silly but could result in real consumer harm. But one of the reasons I think all of us, and finance is a male dominated world and you have to take that into perspective. But I think one of the reasons everyone thought this was so silly was, you and I are both into CrossFit. If you came to me and were like, Noble's getting bought out by Reebok and the FTC tried to, file a suit and they said, hey, all CrossFitters are going to have to pay $5 more per lifting shoe, I'd be like, yeah, I don't want to pay $5 more, but I'd be like, you're paying $120 for lifting shoes, $5. Here it's, hey, suburban housewives are going to have to pay, instead of $250 for the handbag, it's going to be $275. Be like, okay, that is harm, but their handbags are not a God-given right. I think where this merger is going to turn is the market definition. And I do think the FTC was very clever here, right? They came out and they said, hey, this is a merger of two accessible luxury. It's accessible luxury is the definition, I believe. This is a merger too. And look, Judge, I understand that's a small carve out of the market, but we're not making this market definition up. This is how the companies themselves, this is how Wall Street, this is how they've defined their market. And these are the two largest players. We don't know their market share yet. It's redacted, but I'm sure we'll find out. These are the two largest players merging. We're using their own definition of the market against them to show this is an antitrust issue. Again, I think you and I think that it's kind of silly, but I did think it was clever. And I think the whole case is going to turn on, does a judge believe accessible luxury it's going to come, there's going to be competitive entry arguments and everything, but I do think it's going to turn on, does a judge want to look at all handbags or does he want to look at affordable luxury? Does he want to look at just luxury? If the FTC is successful in kind of hanging the companies on their own words, I think there's a good shot they win this. So what did you think about the market definition?
I think it is one that this FTC could convince this judge of. And it's one of the reasons why I'm happy to think, okay, so really as of today, in a sense, all of the deal premium's gone, although it's probably worth less than it looked like it was worth last August. So I think you could still lose, $10 a share from here. You're not done losing money if you own Capri, if the deal breaks, but share price is where it came from. My thought that we can find a later lower entry, if we even want to enter later and lower, is that this FTC could convince this judge. I think it's going to hang on documents. And one of the reasons why I'm generally and here skeptical of hot documents is that the market definition is an econometric reality that has a lot in it that rando kind of mid-management salespeople at a company might not be thinking about. So that there's a certain amount of kind of jocular competitive banter, mostly in the marketing type people, that the antitrust authorities love to cite. We gotcha. You wake up trying to get Tapestry or get, this one competitor that you're thinking of because you're this one kind of middle manager putting together a PowerPoint presentation, and that's on your mind. Well, my point about what this competition is like and what this very competitive market is like, he has no idea what's going to blindside him from some boutique that's going to be the hot thing a year from now. That is absolutely part of the market, and that is no part of the PowerPoint. That's competition. The competition you get blindsided by. The market's not defined by who he's thinking about any more than a battle is defined by the enemy whose position you're aware of. You could say, oh, this is fine. I'm happily walking through the jungle and I see no enemies, therefore there are no enemies. That doesn't define your enemies. That doesn't define the competition. That doesn't define the battle. And so the FTC thinks they're super clever when they find this lack of awareness of other competitors from mid-management marketers. I bet they found that here. And that is absurdly narrow. It is to win in court. I think they might here, but it's not what the law intended, and it's not economics.
I think about something. Coke and Pepsi might be too far, but if we were talking 20 years ago in energy drinks, right, you'd probably be talking Monster versus Red Bull. And, I know Coke and Pepsi used to be like all the executives hated each other. And I'm sure Monster versus Red Bull, all the executives, it's not quite there wasn't as many years, but I'm sure they all hated each other. And if you had Monster, they'd be like, oh yeah, we're going to stick it to Red Bull and we're going to knife them and everything. And they weren't even imagining, NOCO, the most popular drink among CrossFit people for the most part, right? NOCO popping up a few years later, Bang Energy, Celsius, which is like all the rage. Like there's all these competitors that were on the come that they couldn't even think about when it was kind of just the two of them knifing it out for shelf space in the energy drink. And in a similar way, Nike versus Reebok, they probably weren't thinking about Lululemon. They probably weren't 20 years ago. They certainly weren't thinking about Under Armour. Like these consumer brands, yeah, for a while it can be one or two, but as you're saying, if you're the salesperson, middle management, you're only focused on beating that competitor across the street. The real competitor you actually have to worry about is kind of still in his mom's garage, if that makes sense.
Yes. Let me make one other point about the market definition and how it might not fit the real economics, even if it does fit what the company's thinking about. You said accessible luxury. What the FTC is going for, to be clear, is accessible luxury handbag market. So they're saying the market is accessible luxury handbags, very, very narrow. But I'm speaking to the monopolist of yet another value blog with 100% market share of your own empire. And so maybe the FTC should look at that. But this is very specific. I don't have this data, but I think something that one could look at is whether a price increase in accessible luxury, because another way you could think about accessible luxury is some lady feels like blowing a couple $100. Her shoes are perfectly fine. Her bag's perfectly fine. Her hair's perfectly fine. It's a fun activity to spend the money. If any one of those things had price out of whack, she could also just go to the salon and spend the money on her hair. She could just get shoes. Everything's probably fine. There's no need. This is discretionary. So without being too dismissive of its frivolity, the fact that it's not deep discounted market control or actual kind of European luxury market control, but accessible luxury, I bet the econometrics would show very, very little, if any, pricing power, even if you had this incredibly high market share in any one of these categories, because it's just the amount of money somebody wants to blow, maybe on an outfit, maybe to look better, maybe to feel better, but it doesn't necessarily have to be a bag.
There's one other thing I want to talk about, and this kind of relates to the pricing part thing, but in the past 6 months, we've seen three mergers challenged or blocked: that iRobot, Spirit, and now Coach, right? And I look at that, and all of them, iRobot and Spirit probably might, who knows, go bankrupt. The FTC and the DOJ came out and said, hey, this is a huge antitrust problem. We got to stop this. They might go bankrupt without their mergers. Coach, they're not going bankrupt. Sorry, Capri, they're not going bankrupt, but before the merger was announced in August-ish, the stock was 35. The stock is 35 now. Most ARBs are kind of setting the downside between 20 and 25. Oh, sorry. And I just think it's interesting that, you're having these mergers blocked or contested. And for all of them, like if you went to the buyer today and said, hey, what do you think the fair value for the company is? It'd be a lot lower than the deal price. All of them are losing these deals and, facing some form of financial distress or a lot less rosy future than they look at. And there's no way. Antitrust can obviously block something and then the company can get into stress. But I just think it's interesting. I can't remember seeing this many. Maybe it's because it's a more aggressive administration and they're trying to challenge more deals. But I just can't remember so many deals where the downside, the block, the merger break price is so far below this. Spirit was 20 standalone before everything happened. And now that took about 2 years to play out. But today the stock's trading under 4, right? Like I can't remember so many deals where the downside is so far below the unaffected price in merger arb terms. And I don't know if I'm talking about, it makes merger arb hard because when the downside keeps decreasing, like the odds keep changing, it makes everything hard. It's strange to me. I don't remember a time like this.
Yeah, I think that it'll be interesting to see. I kind of think about it in terms of peaking, and certainly there's a lot of peaking at the FTC. Maybe there's some amongst the judges that made me very wary of antitrust for a little while here because the fact pattern on divestitures was so bad for the companies. You were walking into an industry pitching something to the FTC, and one of the things that people more pro-enforcement than I am really had going for them is that the nice compromises with companies, especially complex divestiture packages, were disasters in a pretty good number of cases, rental cars, grocery stores, where the divesting company got rid of the garbage that they didn't want anyways, kept the good stuff, formulated complicated structures, the assets being sold, got in distress, they bought them back. And that robustly increased enforcement. Now we have this other peaking issue, which is you look at where they blocked, and they're blocking a lot of deals that the target just got obliterated. It's like, oh, this wasn't a 2-to-1. This was this is going to 0 in terms of the number of competitors that the customer has from that deal. Rite Aid, Spirit, iRobot, and then if they don't care about that the companies, the SEC don't care about the investors, but this is the same administration and the same kind of progressive side of within the Democrats that Lena Khan certainly represents, kind of the Liz Warren wing of the party, that is also at the same time attacking buybacks. So dividends taxes go up. They don't want you to sell in a strategic deal for nominally antitrust reasons, but now they don't want you to buy back shares either. So it's unclear to me what this is other than just an attack on the idea of private property. What is your private property if you can't get any of it back? What does it mean to own something that you can't eventually sell? I mean, iRobot, I think, would be the classic case of why would you have started that? I mean, selling to Amazon, that was the plan, that was the exit. You take years of your life and complexity and risk, and it might not have worked, but it did, to the extent that you can hand it off to somebody someday. But if you're not allowed to hand it off, and you're not supposed to buy back shares, and you're not supposed to give it in, what does it mean to own anything? So that's clearly not keeping them up at night, but it is a question that I think about when I look at what the FTC is doing.
Yeah. The one other, we don't have to talk about it now. The one other thing that jumped out to me here is just along the lines of Coach was, again, this was 35 or 40 before the deal comes out. The deal's at 57. Most people think the downside's kind of in the 20 to 25 range. People had kicked around, hey, does Tapestry really want to own Coach now? The downside's worse. If they could walk, they'd be better off, right? If you and I were in a deal, if I was going to buy your house for $1 million and then the guest house went away, but for some reason I still had to buy it and the guest house was 500,000, like it'd be better for me if I could walk or recut. In this case, it'd be better for Tapestry if they could walk or recut. And Tapestry came out really fast and said, we're going to fight the FTC in court and we'll see in court. We think this merger is fine. I was a little surprised by that just because, if I was CPG, maybe I say, hey, this is a gift horse, right? If we just go along, wait out, fulfill all of our obligations, but then, in August or so rolls around, merger times out, and we can just walk, we can use this to either recut or walk away from a bad deal. But it seems like they're ready to go to court. So I was a little surprised by that. Not to say that they couldn't, right? Maybe August comes around and they do decide to walk, or they do decide to try to recut. But I was just a little surprised by that. I don't know if you had any thoughts there.
The FTC is more porous than the DOJ. I think that was really just an indication that the companies have seen this coming for probably months thematically and probably weeks in terms of the plot. You have 5 people, 2 Republicans. They all have staff. At least some of the staff might have been more sympathetic to the companies. So the companies knew what and when this vote would have been. So they were ready. And there's also the contra indicator that if you were the buyer expecting to be in litigation with the deal target over your merger duties, you're particularly meticulous going through the duties process. Similarly, JetBlue that was able to settle with Spirit on terms that were probably okay for JetBlue was meticulous about their appeal. I thought their appeal was actually kind of good, right? I thought it was hopeless or nearly hopeless, but I thought it was, not that this matters. I thought it was correct. And they, somebody managed to type that all up despite the fact that they were actively working to get out of their deal when they could. So I think that's all it is. I think they would leave the instant that they could. I think they should leave the instant that they could. And they're just living up to their merger duties.
No, I certainly hear that. I guess, I'm just looking at the Tapestry response. There's no question this is a pro-competitive, pro-consumer deal. It slams the FTC. We're planning to go to court. If they wanted to walk, they could just have put out a press release that said, we have read the FTC's lawsuit. We disagree with the conclusions, and we look forward to fulfilling our merger duties and pursuing a legal case. Right? Like, they came out very wholehearted, and to me, that seems like something you put out when you want to go to court and win. Versus if you're trying to time it out. But I do know a few people who are saying, hey, maybe from a purely economic view today, it seems like they'd be better if they timed it out. It just doesn't seem that's the route they're going.
I think so. Yeah. Also, you really don't want to be left in an industry with these kind of precedents, because one of the reasons why some of these companies have gotten so screwed over after the deals have been blocked. I think they make our country much less competitive, and they've been really harmed. Is you're left unable to do that. I mean, one of the ones we did that worked out well was the Horizon deal. And if they had lost that, what are they going to do? Like, what if that's elite? If it's a crime to sell your company where the whole structure of the industry is built on research, and then you kind of sell to a commercial a buyer at some point, and that's far and away the most rational, efficient way to run an industry. If that's a crime now, then what are you supposed to do? And they would be left, competing with 10x the scale European competitors. It would be a crime to sell yourself to LVMH. Well, your company is worth a lot less if you're not allowed to sell to LVMH because somebody at the FTC doesn't want you to do that.
No, and not to belabor, but as you mentioned with Horizon, like it sounds great in a press release, like, hey, we're stopping big pharma from buying these innovative drug companies. But what you're really doing is you're saying, hey, VCs never fund drug development again, right? Because the exit you fund one very novel drug, you have to sell to big pharma at some point, right? It does not make sense if you're a standalone drug company to go build your own sales force and do all of this sort of stuff. So if you want the rule to be big pharma can't buy anything, okay, but now big pharma is going to have to develop every drug, and you're just going to have a lot less innovation. So here, I mean, I guess, yeah, if the answer is if you compete in the accessible luxury market, you can't sell to anyone. Okay, cool. But there'll probably still be entrants in the accessible luxury market just because people do it, but there'll be less investment in it, because if you can't exit, it does make sense eventually if you have a good brand to sell someone who can really get scale, right? Really scale the SG&A, put it into their stores, realize some synergies with the with the logistics and everything. Anyway, starting to ramble a little bit and get both of us getting more into libertarian bet. Chris, it's been about an hour. Why don't we wrap it up there? End of April. Looking forward to chatting in May. There's probably going to be a lot of events we don't know. There's some events we do know, and looking forward. We'll go from there.
Thanks, Andrew.
A quick disclaimer. Nothing on this podcast should be considered investment advice. Guests or the hosts may have positions in any of the stocks mentioned during this podcast. Please do your own work and consult a financial advisor. Thanks.